Hey everyone, Rob Wolf with the Loan Factory. You're listening to the Lone Wolf podcast. That's loan spelled Loan, as in borrow money. I talk about mortgages and throw some real estate talk into the mix. And you might also watch me on my YouTube channel by the same name, the Lone Wolf podcast. Okay. You can reach me by email at rob.wolf@loanfactory.com or call me on my cell, 727-366-5722. That's my only cell. I'm available after 5 o'clock and on weekends. I'm not a bank. If you get my voicemail, leave me a message. I'll get back to you as soon as possible. Okay, I'm in the ABC business, always be communicating. I'm a licensed loan officer here in Florida, just outside of Clearwater, also in Pennsylvania, where I grew up, and the great state of Colorado, where I was just off the grid a few weeks ago, up in State Forest State Park. This podcast is just me. However, if you want to be a guest sometime, let me know. If you're in the mortgage field / like you're a real estate agent, a title company, mortgage insurance, let me know. We can work something out, and you could post it on your website and, go from there. I keep these podcasts under 30 minutes. This one will be about 20 minutes today. I think so. They're aired every Wednesday at 9 o'clock at night. If you miss one, no worries. Just go to your Google Chrome and punch up the Lone Wolf podcast, and you can see previous episodes as well as this one. Okay, so what we're going to talk about this week is the CD, closing disclosure, also known as an LE, loan estimate, when you first get your rate locked in. So I'm going to share my screen, and I'm going to do my best for the people that are just listening on a podcast. I'm going to do my best to explain what I'm showing on the screen. And you could probably go into Google Chrome and get a sample CD, or like I said, just go on YouTube and just watch this video when you get a chance. Okay, so anyway, when you first locked in, you got an LE, a loan estimate. Okay, as your loan was getting closer and closer to the closing day, you were getting updates. This is the final closing disclosure, and you'll get this 3 days before closing. You have to get it 3 days before closing. That's the law. And this everything's finalized. We call it clear to close. And you're going to be given a breakdown of the costs. I'll go over that, but you'll also be given a dollar amount to wire in to the title company or wherever the closing is going to take place. Okay, so in this case, this was a loan in the summertime in July. It's got the sale price, it's got the buyer and seller, it's got the lender. I'm a broker for Loan Factory, and the loan term. This is a 30-year fixed rate purchase price conventional loan. Okay, so we scroll down. So on the first page, the loan amount's $156,000. The interest is 6.125, and the principal and interest. This is just the principal and interest. That's it. Is $947.87. There is no prepayment penalty. Okay, and hopefully you buyers, I haven't seen prepayment penalties in a very long time. Make sure you don't have any prepayment penalty. For example, what if you inherit a bunch of money? You hit the mega millions, you want to pay, not the mega, but you know what I'm saying. You get a lot of money, you want to pay off your house. You don't want to get penalized for that. Or, and I'll talk about this later, if you want to prepay, pay down your principal, pay a little bit extra each month. You don't want to get hit with these prepayment penalties. All right. So just make sure you have that covered. Balloon payment. No, this is a fixed rate. Okay. For 30 years. So in this projected payment section, we've got from years 1 through 30. Here's his principal and interest. There is no mortgage insurance. This person put more than 20% down. The estimated escrow, this is home insurance and real estate taxes. So you think that $11.22.50 is the monthly payment. Well, not quite, because there's an HOA fee. Memory serves me, it was $371 for this. So really, the buyer's monthly payment, what they need to be, thinking of is this $947.87 plus this $545.63. Okay, I know it's a little confusing. I don't know why they do that with these CDs. Maybe because the HOA is separate, they can't find a line to put it there. I don't know. Now, if you're buying a house and you can't put 20% down, you'll see another column here. Okay, it'll say years 1 through 7 with your monthly payment, and then years 8 through 30, and then it won't have that mortgage insurance. Reason being is they think that after 7 years, you'll have enough equity in your home to pass that 20%, so you won't need mortgage insurance anymore. Okay, so just keep that in mind that you would get 2 columns here if you don't have 20% down as initial down payment. Okay, so the closing cost is $10,255.70. I'll go into the breakdown soon. And here's the cash to close. Now, it's really not cash, but you're going to be wiring the money in. And you will get this, like I said, 3 days before closing. That's the law. And this is the amount you'll wire into the title company. And I've said this before in other episodes. When you get the instructions, make sure you get with your lender. And I do this with my buyers. I do a 3-way call with the title company saying, "Hi, this is Rob Wolf with John Doe Buyer. Is this Susie at the title company?" And she'll say, "Yes, this is Susie." I say, "Okay, just want to make sure the amount, the wiring amount, the routing number, and the account number, where to wire the money into." And the title company will give you a sheet and instructions that you go to the bank, but it's always good to double check. If you receive an email that's different than what you received from the original title company, it's a red flag. Okay, so get with your lender about that. If they changed locations, oh, we've got a new account charged here, definite red flag. Okay, get with your lender on that. All right, so let's go to the breakdown here. In Section A, the origination charges, okay, this is the section that your lender / broker, okay, this is what they're getting paid, and this is where they have some wiggle room when you're shopping for a loan. Okay, let me go off the reservation a little bit and kind of explain it at a high level the mortgage interest rates. Okay, so right now the federal funds rate is about 5.25%. Okay, this is, you hear about this a lot. Oh, the Fed is meeting. Are they going to raise interest rates? Okay, that interest rate that we're talking about is what the Fed charges banks for overnight lending. Okay, well, the lenders, could be private lenders or banks, they take this money and then lend it to you and I in the form of a mortgage. And they need to make a profit. So the going rate is somewhere around, 2 to 2.5%. That's why today, as I do this recording on October 2nd, a 30-year fixed is about 7.5%. Now, there are other factors out there, as we know, if your credit's really good or bad, that could affect the rate, down payment, what have you. So that's the range that they're looking for. So let's just say 7.5% is the going rate for a 30-year mortgage. If you're seeing rates offered at 6.5%, well, there's going to be fees associated with that. And that was the case in this loan. My buyer wanted a lower interest rate. So I went over the numbers with him that he could get a lower interest. I think it was 6.75 at the time, but he wanted to buy it down. So we got him down to 6.125. It cost him a little more than 1%. Okay, so it cost him $1,640. There's also a processing fee that the buyer is charged here of $800, and the underwriting fee. Now, the underwriting fee is what the lender is charging. I'm a broker, so I explained in this case it's Rocket Mortgage that we used. I've seen these go up as high as $1,800 with some lenders. So again, if you're a buyer, you want to ask your lender, what do you charge for underwriting fee? And as a broker, I can't say that definitively because it depends on which lender I go with. But I would tell them, well, if we go with Rocket, it'll be $1,095. If it's a different lender, that could be a different amount. But keep that in mind. It'll be somewhere around $1,100. This is at the low end underwriting, up to that $1,800. Okay, so not to belabor the point, but this is the area origination charges. That's where you as a consumer and the lenders, okay, you could talk about those things, but that's where the lenders and brokers get, that's where they're trying to make their money. All the other charges, okay, I as a broker, I have no control over whatsoever. Actually, I don't have control over the underwriting fee either, but you get the point that these are the areas that you might be able to work out as a buyer. Okay, so Section B, we got appraisal, credit, and flood determination fee. The appraisal is on the right-hand column before closing. Reason being is 9 times out of 10, you're going to have to pay for this fee up front. Okay, and the reason you're going to be paying it up front, excuse me a second there, my phone was on. The appraiser wants to get paid for their service. It used to be just pay them at the closing table. Well, what would happen sometimes is the appraiser would do the work, the deal would fall through, and then he'd have to spend time going after the person to get paid for that. And sometimes they wouldn't pay at all. So that's why they want to get paid up front. So be prepared. You're going to have to give them your credit card so they can go out and do the work. This was a condominium, so a little low on the appraisal amount. I've seen it for single family homes, $600 to $800. Okay. Now, if it's a large loan, we're talking $1 million plus, you're probably going to have to get 2 appraisals. So be prepared on that one. Credit report was $60 and the flood determination fee was $12. Okay, so let's go to Section C now, the title. The best way I describe title is think of it as a car. You want a clean title. You don't want a salvage title. You don't want a flood title, water damage or a fire or anything like that. Well, it's the same thing with your property. The title company is looking to make sure, okay, the survey, the property lines are all okay. They want to make sure there's no liens on the property. What if a contractor, 2 sellers ago did some work and never got paid and he filed a lien? Now, it would have probably come up, the previous seller, but let's say the person you're buying it from now never paid a contractor for the work and he filed a lien. Well, this would come up in the title search. Okay. And I just closed on a loan today, and this came up a week and a half ago that 2 or 3 sellers ago, the title company didn't record the deed, and that title company went out of business. So there was a break in the chain. So they had to do some scrambling to get the title updated and pass on to the present buyer. So anyway, that's what the title company's doing. Okay. And honestly, I don't see these fees vary much. Some of them are state regulated. In Florida, usually the seller chooses the title company, but then they pay for the owner's title policy. Okay. And you'll see that later on. So you add up these fees, the $35.35, the $547, the $16.71, it's $57.53, but we have that credit of $475 for the appraisal because we paid that already. So really it's $52.78 this section. All right. So now let's go to these other costs. The government fees, okay, we need to record the deed and the mortgage. Okay, that's $224. And then there's transfer taxes. And these vary by state. Here in Florida, the buyer pays about 0.4% of the purchase price to transfer it. The seller, they pay a little bit more. It's about 0.7%. Okay, so like I said, you could check with your state. Every state, has different numbers here, but that's where these transfer taxes come from. Home insurance premium, it's not listed here, but they do have it listed down here. Okay, so in section F and G, this is where we're going to see home insurance, mortgage insurance, and real estate taxes. Okay, there's no mortgage insurance because like we said, they put 20% down. Prepaid interest, okay, you're not going to be paying like your mortgage right away, the principal, but you do have to pay the interest as soon as you close. So in this case, there's 4 days of interest that the buyer has to pay, which is $132.70. Okay. And then we also said the home insurance. Now below, we've got home insurance here, an additional 3 months, and we got the property taxes for 11 months, and they've got other taxes. So I'm guessing that there may have been property taxes ad valorem, and then maybe a county tax or something of that nature. Now, I will say it depends on the time of the year when you close, how much is going to have to be collected upfront. I've seen some where they collect a full year plus an additional 2 or 3 months of real estate taxes. And I've seen others that they just collect 6 months. Okay. So just be conscious of that be prepared for at least a year, if not more, to pay upfront for real estate taxes and home insurance. All right. So then we scroll down, August dues. Okay. That's the condo association. That's the HOA. Okay. So my memory was correct. It's $371 a month. Then the buyer has to pay his real estate agent a compliance fee. Now, this is not their commission. And I've seen this before. I just closed this deal this morning, and it was $195. This real estate firm charges $395. Okay. So keep that in mind. Remember, I mentioned a title owner's policy that the seller will pay. Okay. We have to list it for disclosing, but you'll see, I'll explain, they do get a credit on the back end. Okay. And then a transfer condo. So this condo complex, they charge $150 whenever there's a transfer of ownership. Okay. So when we add these fees up, it comes to $45.02. There is nothing in the right-hand column. And so we total the two up, it's $10,255. Remember, we saw that on the front page, but that credit of $475. So really the closing cost is $97.80 and 70 cents. Okay, so let's scroll to the third page. Remember, I told you about the loan estimate, the LE, that your lender will give you within 3 days of locking you into an interest rate, and then you'll get updates as the loan changes. Okay, so this first one, loan estimate, that's what I gave this buyer as soon as we locked into the interest rate. And the final one, which this is the one we're talking about, this gives the number, everything is finalized. And typically what I've seen is the loan estimate tends to be higher than the final number, because the lenders or the brokers, we want to overestimate. We don't want to give you surprises that, oh, we said it was $47,149, but actually it's $55,000 you're going to pay. So we rather overestimate. Now, there are some fees in here we cannot be off on, but there's other fees that we just have to guess, like real estate taxes, home insurance. Okay, there is some leniency on there. But typically, I've seen these within a couple $1,000s of from the first time to the last time. Okay, so now let's kind of get to a summary of the transaction. So the first one is, okay, this is what you, the buyer, you owe. Okay, so total it's $204,877.18. Well, where's that come from? Well, the purchase price is $195,000. Closing costs is $9,780. Remember, we spoke about that little credit from the appraisal. And any assessments and the condo dues, that's because there's a couple days left in the month of July. So that's where that $204,877 comes from. Okay, but there's also credits that the buyer is receiving. Okay, so let's look at that. It's saying $159,149.09. Well, they put a deposit of $1,950 down. Okay, that makes sense. The loan amount is $156,000. That's what the buyer's getting from the lender. In this case, it's Rocket. There's county taxes that he's not responsible for of $149, and then other assessments. So in this case, remember I told you about that owner's title policy? That's in this credit. Okay. Honestly, I don't know what the other details are of the assessment. It could be other real estate taxes that they get a credit for. So when you add these up, that's the $159,149.09. So when we look at the $204,877 minus the $159,149, the cash to close, or what he's going to wire in, is that number. Remember that from the first page, that $45,728.09. Okay, and this is the number that I always tell people, be careful, make sure you get the routing number and all that. You get, I think I mentioned it earlier, but just make sure you're wiring into the right title company, right accounts, and what have you. Okay. I'm not going to read this stuff verbatim here about additional stuff about the loan. But the last one, I will say this, that your total payments, if you make the minimum amount or that exactly month amount for 30 years, then this buyer would pay $347,118.90. Okay, the finance charge, the amount financed, the APR, and the total interest it's more than double. What I always tell people is, if you can afford a little bit extra each month, go ahead and prepay that, and that will go towards the principal of your loan. Remember, I told you don't want to get caught up in a prepayment penalty. So you can always Google, prepayment calculator on, Yahoo Finance or what have you. And let's just say your monthly mortgage is $1,662. Well, round it up, pay $1,700 a month. Try doing that. And just that little extra of $38 a month, you'd be surprised it'll reduce from a 30-year to maybe a 26-year mortgage. Okay. If you get a annual bonus from your work, take half of that, put it into the principal. If you get money back for taxes, take half of that, put it in the principal. If you do that, you'd be surprised how quickly you can pay off a 30-year fixed mortgage. Okay. Worst case scenario, if you move in 5 or 10 years, you've got that much more equity in your home. Okay. So just keep that in mind. I always encourage people to try to prepay as much as you can, or just a little bit. Like I said, every little bit counts. It compounds itself. Okay. So that does it for our podcast this week, or YouTube video. So hopefully you learned something. And if you had questions about this CDLE, please reach out to me. Again, rob.wolf at loanfactory.com, or call me on my cell, 727-366-5722. And I'd be happy to answer any questions for you. All right, folks, have a great week, and I will see you on the next podcast. Take care.